Hi everyone, welcome back. Okay, tonight I'll be continuing what we have left last night, all right? And today I will start with you the evaluating and enabling strategic change. And what we will be covering, okay, in this particular evaluating and enabling strategic change will be the financial analysis, right? And then we'll be also covering the applications of IT and then e-business. Okay. I hope you are not overwhelmed with this particular notes that I have here. All right. Okay. When it comes to financial objectives, okay, under financial analysis, you have you need to understand the relationship between the financial objectives and business strategy. All right. Okay. Because the reason being, okay, for you to pursue with your strategy, definitely you need funding, and then of course you need to find the right source of funding, and then at the same time as well, okay, in the context of the technological era, right? So there are a lot of changes that actually may affect the way how the finance will be functioning, all right? So indirectly, okay, when we talk about this particular financial analysis, all right, we will look into the finance function, and we will also be looking into financial analysis and decision-making techniques, and cost and management accounting, all right, standard costing and variance analysis, and then I will also be covering with you evaluating strategic options using marginal and relevant cost techniques. Oops, sorry for the wrong spelling there. All right, under this particular finance function, okay, you must know that, okay, basically the traditional way, okay, how this particular finance function operates is that, okay, we normally will record our transactions, things like that manually, and then with the technology, people start to actually moving towards computerized kind of accounting, and then now it is much more advanced. There are lots of new things coming in, for example, like big data, cloud computing, okay? So, and in fact, there are a lot of other kind of predictive analysis that software that can actually help us to predict what the future trend of our sales like, and that's where the finance function, okay, for example, can do the forecasting, things like that. And then with all this big data and cloud computing, all right, currently we hear about fintech, which we never heard about it before. And then now with the online transactions, okay, we have to go through, when you make payment, you have to go through a secure payment, okay, you are brought into a certain website, okay, where you make your payments. And we're also talking about all these blockchains, all right? So basically, the finance function actually evolves, okay? We no longer look at things like how we did before, especially comparing during my era and yours, okay? Most of you are quite young outside there, okay? So because of that particular impact, right? Accountants nowadays and people like you who will be working later, you need to actually acquire not just the accounting knowledge that you have. Perhaps you may want to actually further into looking into other areas, like, you know, additional learning on a computer system, and then perhaps you want to be a system, okay, you take system analysis course that can actually add up to the qualification that you have, all right? So that's why you see that nowadays, and most of the subjects, okay, they start to incorporate all this big data, cloud computing, right? And this actually has changed a lot of the finance function structure, whereby sometimes, okay, finance function can be adapted as a business partner approach, as sometimes you outsource certain activities, all right, and sometimes like, okay, you set up a shared and global services, business services. And the next part that we are going to look at will be the financial analysis and decision-making techniques. Usually, all right, there are three types of relevant, three types of decision relevant to the financial requirements, okay, of a business, like investment decisions, financing decisions, and dividend decisions, okay. And then because of this kind of decisions that you have to make, all right, you need to actually know certain tools and techniques for you to actually decide on what kind of funding that actually you are going to go for, or what kind of investments that you are going to actually go for, all right, and then whether you will be paying the dividends or not. So you need certain tools and techniques actually to analyze whether you have enough resources for that or not, all right. So basically most of these particular techniques that I have here, all right. First, let's say that, okay, you're trying to find sources of finance, okay, maybe you have several options. First thing is that, okay, when we talk about financing requirement, okay, you can actually evaluate them using SAF as well, all right, suitability, acceptability, and feasibility. And then, and the kind of evaluation that you do usually when it comes to, okay, purchasing an assets, okay, whether we would actually want to go for a long-term debts, or are you going to actually pay it cash, okay, and then with that particular method, do you think that our stakeholders will accept that particular method? Okay, it depends whether our stakeholders are risk averse or risk takers. And then at the same time as well, okay, we need to look into whether, okay, if let's say you plan to look into borrowing, whether banks are willing to lend the money to you, or whether shareholders are willing to actually invest more money on that particular activities that you want to have, all right. So these particular decision making techniques, like what you have here, this is what you have learned previously in your fundamentals. To those actually who started ACCA from fundamentals, all right, you learn it in your basically your F5, F7, and your F9. You will learn this, all right, some of this, okay. So some of you may have come across ROCE and then payback, NPV. This is something that you need to know how to actually use it, all right. Basically, it's not going to be like in detail, but at least you know what they are, and then what is it for, or what are the advantages and the disadvantages of this particular investment appraisals, okay. And basically the do's and the don'ts of using this particular investment appraisals, okay, that will actually help you at your SBL level. And if let's say you're dealing with all these risks and uncertainties, perhaps you have to go back to your expected values and your decision trees, which actually might help you in dealing with this particular risk and as uncertainties. Sometimes you might want to look into financial reporting and the tax implications, all right. And like I mentioned to you, there are times that you may want to actually look into the organization performance or the financial position of the company. Okay, this is where you'll be analyzing financial and non-financial data. Another aspect as an accountant that, okay, the knowledge that you need to have and you need to bring into your SBL will be, okay, is your cost and management accounting, basically, okay, you need to actually know what strategic cost management and control are. And then you may want to actually do some forecasting. So you may need to look into what linear regressions are, and then your time series analysis, which you can look into the trend of certain types of business activities, for example. All right. When you talk about sales, okay, you may want to use time series analysis to look at the trend of the sales, and then or you may want to use linear regression to find the relationship between your cost and your sales, which cost actually that you have actually spent that generate to higher sales. So you may want to find this particular relationship, okay, whether to what extent they are related, okay, not related, correlated, okay, that's the better word. All right, and then the strength of the correlation. So this is where you may want to look into linear regression. And then basically this is what you will normally hear most of the times will be budgeting. So you need to know the benefits and limitations of the type of budgets. And you may also need to actually do some planning, coordination, motivation, control, and authorization, okay, when it comes to this particular budgeting, right? And then another part of financial analysis, okay, will be understanding standard costing and variance analysis. All right. So you need to know the purpose of having this particular standard costing and variance analysis, and bear in mind, okay, you need to know as well what are the kind of companies that actually can apply this, and what are the kind of companies that are not suitable to actually apply this particular standard costing and variance analysis. Okay, usually companies that are stable are not much affected by the external environment. Okay, not that dynamic. They are stable organizations. Usually, it's easier for them to actually use the standard costing and variance analysis. For those compared to those companies that actually affected by all this external environment, and that means okay, the companies that are very much affected by the dynamic environments, all right, which consistently change. So the company is not stable. So when it is not stable, it's quite difficult for them to actually apply standard costing and variance analysis. Reason being, all right, when you use standard costing, that means you have to have like some estimates, all right, and then this particular estimates need to be predicted earlier, all right. So this is like a standard whereby, okay, for example, when it comes to raw materials, okay, you have some sort of like a standard price that you're putting to that particular raw materials. You can only do that, okay, if that particular raw materials, okay, consistently over several periods still remain at the same price. It doesn't change much. So it's okay for you to actually use this particular standard costing. But there's certain type of materials that keep on changing, okay, the price keep on increasing, going up, going down. So it's quite difficult for you to actually set a standard cost for that particular materials. Okay, so you need to actually look at the nature of the business, okay, whether they are stable business, okay, so they are in a stable environment or they are not in the stable environment. Okay, why? Okay, when you talk about all these particular tools and tactics that you have here, okay, whether it is under, cost and management accounting, whether it is the decision making techniques, okay, basically you need to know the do's and the don'ts, and that's why you find that in some of the specimens, when they give you the exhibits, and then sometimes the question asks you to actually evaluate on the assumptions made in preparing that particular analysis. So only if you know the do's and the don'ts, okay, the advantages and the disadvantages of these particular tools and techniques, all right, that you are able to make your comments. If you are not able, if you don't know, then it will not be easy for you to make that particular comments. Okay, those are your prerequisite knowledge, all right, which you need to bring it up to this particular level, all right, because Always remember, finance is crucial in strategy. Remember, if you don't have any money, you will not be able to actually pursue with your strategy. So as an accountant, basically your task is actually managing these resources. Okay, I will call this as what? Okay, I always tell my students that the role of an accountant is actually a financial cardiologist. You know why I say financial cardiologist? The heart of the organization to actually uh, operate, all right, and function is actually money, all right. No matter how big your strategy is or how little your strategy is, how small your strategy is, it requires money. Okay, so you are managing that particular money, and if you don't have money, that means the company cannot operate. It's just like a person without a heart. Okay, and your body can't operate. If you have a heart attack, you'll collapse, right? So all of you are going to be a financial cardiologist. All right, so remember that term very well. I gave that term, nobody else gave that term. All right, okay. So the last thing, okay, the last techniques that you have actually learned before is definitely, okay, you have to evaluate the strategic options, okay, that you have. Okay, sometimes you may need to use like marginal and relevant cost techniques. Okay, in using this particular marginal and relevant cost techniques, you must remember, okay, this goes back to what? This goes back to your management accounting. Okay, and you need to take into consideration, okay, the cost that are changes, okay, with the decision being considered. If let's say you decided to take up that particular decided to pursue with that particular option, you may want to look at what are the additional costs that you may incur, what is it that you may save, all right? So things that are changing, okay, because of the decision that you make. Okay, how to know? All right, just put yourself, okay, now before I make that particular decision, okay, what are my costs? And then when, let's say, you decided to take it up, how would my cost change? Those that doesn't change, it is not relevant for your decision making. Only those that are changing is actually relevant in your decision making. Okay. Okay, this one question here. If there's evaluation of the two or more options available, would we need to draw decision tree with supporting calculations? If you think that it helps, okay, you may want to do that, but usually in SBL, okay, it's actually prepared for you, and then you are supposed to be interpreting it. All right, so but you need to know how it works. If you don't know how it works, then it will not be easy for you to use to actually interpret the outcome of that particular decision tree. Usually, okay, you may not need to actually calculate the whole of that particular decision tree. Is given to you, and you may need to actually comment on that. And that's why I say, because of that particular reason, you need to know the do's and the don'ts of this particular decision tree. All right. And then the advantages and the disadvantages of this particular decision tree, only then you'll be able to actually not just make your decision, you'll be able to comment on those particular assumptions that are made by the preparer. All right. Because sometimes you have an exhibits that are prepared by your junior staff. All right. You may want to comment whether that particular decision tree makes sense or not. So you need to know how this particular staff of yours have prepared it. So these are the things that, because you are considered as an expert, so if let's say he did it wrong, so you may need to advise him and tell him, okay, how to do it. All right. So basically, it's the kind of task that actually people will do in an organization. you have junior staff, okay, you give them work to do, and then let's say if they are not able to do it, you need to actually tell them how to do it and help them to actually, come up with that particular output or outcome that you want. Okay, because sometimes you have staff, new staff, so some people work independently, some people don't. But even if you work independently, if you don't have any experience, you might actually make some mistakes, or whatever that you have prepared do not meet the requirement of your superior. So that's where, okay, the task that you may have, perhaps to prepare a memo to them, things like that, and tell them where they went wrong and how are they going to actually rectify it. Okay, so basically this is what you will actually have. So in the context of, okay, which financial analysis that you want to use in analyzing your financial statements, it depends. Okay, what's the purpose of that particular financial statement being given there, and then what other tasks that you are supposed to be doing. All right, so that actually tells you, okay, what kind of analysis that you are supposed to be doing. Basically, you need to actually know what all these particular, okay, tools is for. Okay, for example, if you talk about, okay, let's say your company is actually trying to make some investment in certain things. Okay, so you might want to use investment appraisal, looking at ROCE, payback period, payback, NPV, IRR, or sometimes you may want to use ROI or residual income for you to perform your investment appraisal. Okay, so it's all depending on what are the activities, okay, that the company is trying to perform, and what kind of strategy that the company are going for. So once you understand that, basically you will actually know which analysis that is appropriate for you to actually perform, okay, in that particular context. And in order for you to know which one, right, so you need to actually refresh back what you have learned previously on these particular areas. So you need to know when to prepare a budget, you need to know when to do the forecasting, basically, all right? And then you need to know when you are going to use your ROCE, and you need to know when to actually calculate for your profitability, okay, liquidity, things like that. So if, let's say, the company wants you to analyze the financial position or the financial performance, basically you may want to use your ratio analysis to do that. All right. And when it comes to analyzing the non-financial data, so anything that doesn't involve the financial data, but it is significant for you to raise that particular issue. For example, okay, number of employees increase, things like that, level of satisfaction decrease. So these are basically, right, the non-financial data. So the next part that we are going to cover will be the application of IT. Why is actually IT important? Why do you think that IT is actually important? Because nowadays we can't actually run away from information technology, okay? In fact, what we are doing tonight is actually applying this particular IT in the context of what? Education, okay? And basically, the strategy we are trying to meet or enable ACCA Pakistan to be successful, okay, in their objective to ensure that people, okay, who are under them, who registered actually under ACCA to take SBL, actually pass the exam. That's basically the the objective, the strategy that they have is to actually have this particular webinar. So in order for this to be successful, all right, this is here where okay, I'm here in Malaysia and you are able to hear at your home, all right? And you are not here with me. You are far away from me, but you can still listen to my webinar. How it works? Because of this particular technology. All right. So technology helps to actually, okay, organization to achieve their objective. And then sometimes, okay, because why? If let's say we were to depend on the old way of doing things, okay, like, okay, we don't have the technology, but you need this particular revision classes. So I may have to actually fly from one particular country to another country to actually see you and deliver the revision class. Okay, but now what we can do is by using just this particular information technology, all this particular system actually helps all of you to listen to this particular webinar. I don't have to fly everywhere to actually give this particular revision, and you can stay where you are to listen to this particular webinar. Okay, so this is what it means by strategic managers are increasingly embracing emerging technologies as a way to innovate, improve performance, and ultimately get ahead of the competition. Okay, if let's say, all right, there are many providers for this particular webinar, all right, so if some of the providers, okay, are not able to provide you with a clear, okay, system, things like that, you have the right to actually choose which particular provider, okay, gives you a better webinar, isn't it? So having a technology can actually help you to be ahead of your competitor. If let's say you are selling the same thing, for example, a simple, like, you know, okay, because now, okay, Ramadan is coming soon. Okay, basically, okay, all these particular new technologies that we have here, in fact, I know you may have it in your own country as well, okay, and not just Ramadan, but since nowadays that people are busy at work and sometimes they don't have time to go out for lunch, all right, so some people take the opportunity to be the mediator, okay, the medium to connect the busy people with food. Okay, so I don't have to go out to the restaurant and have my lunch. Basically, if I can go out, okay, I just use the app, okay, like GrabFood, okay, for them to actually help me to get the food that I want, and it's actually being delivered here at my office. So basically, those are the kind of, okay, things that people do nowadays. And why that you need to be fast? Because people who actually think of that particular opportunity of technology, using technology to make money, they'll be far ahead from those who are not able to move towards that particular direction. Okay, and that's the reason why IT plays an important role. Okay, that's why you see that what we have is evaluating and enabling strategic change. So basically, if you want to change, IT can actually help you to change in that sense. All right. So sometimes, okay, it also helps people, like especially when we talk about housewives, okay, who can't go out, they can't even drive, but they would like to have extra money, so they cook from home, and you have people to actually come to their home and deliver the food to customers, and they get their payment. Okay, so there are many ways to actually make business, and there are many ways for you to actually compete with your competitors healthily. So the use of IT is crucial in this particular sense. especially nowadays that you have all these mobile technologies. So when you talk about Grab food, all right, you use these particular smartphones, okay, to actually buy food. And which in those days, if you need to actually buy food, you have to go directly to the food stall or the restaurant. Excuse me. Okay, and another type that are actually widely used nowadays are the cloud computing. Okay, where you can actually store a lot of things using the cloud computing, including your accounting documents like your invoices, your receipts, things like that can actually be stored using this particular cloud computing. But the issue it will be whether you trust that particular service or not. All right. So that's where you need to look into the risk of using this as well. All right. Because why? When you talk about the mobile technologies just now, yes, it helps. Okay. Someone who needs food and using that particular smartphone, you are able to actually order your food. But what if, okay, there are times that, okay, this particular smartphone, they work on what? Internet system. And let's say, okay, when the internet system is not there, okay, what will happen? Are you able to actually use this? It suddenly stops the operation, isn't it? So these are the kind of risks that you have to actually consider. All right. So you might actually be losing a little bit of revenue for the day. Why? Because the internet is not working. So you're not connected to your customers. All right. As simple of using Google Map. You want to go to certain places and suddenly, okay, during your journey, okay, there's no internet connection. That's where you will get stuck and you don't know where to head for. All right. So same goes here to for business strategy. Okay. So these are the risks, okay, of using IT. And in fact, nowadays as well, you have all this like big data. All right. Okay, which actually, okay, records every single click that you make every day. All right. So big data they are considered as big because why? The criteria of big data is the volume, okay, the velocity, all right, okay, that is the speed, the variety, okay. Why? The variety of your data, and then the veracity is actually the truthfulness of captured data, okay, that is the veracity. And even though big data provides you with lots of opportunity, all right, why do big data provides you with lots of opportunity? Because big data records every single click. Okay, just imagine how many people in this world are using all these technologies, all right, and then how many clicks that they make every day. Just imagine that all this particular data are collected, okay, but when they are collected, they are raw. Okay, they are raw data. It doesn't make sense if you don't analyze it. So people who are able to take advantage of this particular raw data, if they are able to actually analyze it, okay, it would actually give them some meaning and they can take advantage out of that particular data. For example, understanding your customer behavior, okay, using that particular big data that has already been analyzed can put you at an advantage that when you understand them and you know what to provide to your customer that enables you to actually satisfy their needs. Okay. On top of that, all right, there's always threat to everything. All right. So be careful. Why? Because using a system, there's always what? Hackers. Not you can't actually trust everyone. Okay. There are cyber bandits outside there as well. Okay. So that's the reason why you will hear things like cyber bandit, cyber police, okay? So these are the kind of new terms that are actually being produced by all this particular technology, especially the big data. Okay, at the same time as well, all right, once you have this particular big data, all right, this particular big data, okay, provides you with information. Okay, can provide you with information if you are able to analyze it, like I mentioned just now. And one way to analyze this particular big data is data analytics, which can actually provide you with information, all right? And then this particular information, basically, okay, you are able to actually use it to help you in your strategy. As I mentioned to you just now, if you understand the behavior of your customer, you'll be able to come up with a strategy to enhance, okay, your company's or your organization relationship with your customer. That means you will be able to enhance your customer relationship management. Okay, I hope you know what customer relationship management is all about. Okay, if you notice that nowadays we have got lots of loyalty cards given by organization. If you are a frequent buyer, you get discounts, things like that. So that's one way how, all right, this particular data, okay, which is into information, like you already know your customer's behavior, and you'll be able to know what you should be promoting to certain type of customers. Okay, what you shouldn't be promoting to them, okay, what they like, and then what they don't like. Okay. And once you have this particular IT, you need to have some system, IT and system, you need to have some security controls, all right? Because like I mentioned to you just now, there's threat here, threats of hackers, viruses, things like that. So at least you need to come up with a mechanism to help you to control, making sure that your information and your data are safe. And at the same time as well, okay, in order for you to do that, okay, you need improvement in terms of like regularly maintaining your system. So you may have some policies related to IT system or information system, and definitely the staff that you actually hire, okay, must be someone that is trustworthy. And then at the same time as well, okay, if let's say the data that you have, okay, can be turned into various type of information, okay, you need to make or assign someone who will be responsible to actually manage and taking care of that particular data, right? That means you are trying to put some ownership there so that they have sense of belonging towards that data. So if anything happens, okay, so when they have that sense of belonging, they will be willingly to take care of that particular data because they know that they are responsible for that data. All right. So as I mentioned to you just now, with the big data, you have security. Okay. Why? Because there's cyberspace there outside there, and you wouldn't know what you have inside there. All right. So there are many people, there are good people, there are bad people as well. So as a precautionary measure, you need to put in place, all right, cyber security, so that with this particular cyber security, it enables you to protect your data. And then all this particular data, it is crucial for you to take care of them, because remember, if you want to make a good decision, you must use a good quality of information. If you don't have a good quality of information, that's where it will distort your decision making. Okay, once it's distort your decision making, that's where you will not be able to actually make the right decision, and you will not be able to achieve your objective. And in long run, you will not be able to actually move to, excuse me, you'll not be able to move towards your long-term direction. Okay, so these are some of the examples of how, okay, your senior management may need this particular quality data for their decision making. All right, for example, if you talk about new product development decisions, okay, whether you want to produce new product or not, okay, you need some data that can be turned into information, okay, to help you in this particular decision making. And same goes to marketing decision. Definitely you need information, all right, for you to come up with the right marketing strategy, all right. Same goes to your pricing decision, okay, in order for you to have a right pricing, all right, you need information. So information comes from data. So if your data are secured, right, this secured data indirectly will provide you with a good quality of information, and at the end, you'll be able to use this particular data for your decision making. Well, I'm looking at the question panel. There are some questions coming in. This particular question is actually related to the first one just now. Okay, you're asking me on the probabilities and amount given related to two options, and it was required to analyze what made the expected value. All right, sometimes this why I say, all right, in managing this particular risk, you're talking about the financial analysis just now, you may want to use the expected value. Okay, so let's go back to what we have. So I hope you actually can get it, okay, from this particular application of IT, right? So nowadays, okay, IT is actually very crucial to help an organization to achieve their long-term direction. So why do I say that? Okay, if you notice that, okay, for traditional businesses, like a bookstore, for instance, okay, if they don't change with this particular technology, they will not be able to survive, right? And this why you see that there are certain types of, okay, business. You see that particular shop when you're small, but once you start growing up, you find that that particular shop no longer exists. All right, so it requires you to actually change with the environment that affects you. You have to adapt to it, and you have to actually find ways to address that particular impact. So if you are not able to do that, then you'll not be able to survive. Okay, we are talking about sustainability here. So IT, okay, can help you to achieve that particular sustainability, to make sure that your business, okay, remains in that particular industry. Okay, that's very crucial. Okay, always remember that the purpose of a strategy is to ensure that you maintain to be in business. Okay, you don't want to close your business. You want to continue to be relevant in the market. Okay, no matter how big you are and now you become small, it's okay as long as you are still in the industry and you can still do your business. That's the purpose of a strategy. So if IT can help you to, okay, accelerate, okay, in moving towards your direction, then why not use your IT? But again, it will fall back into whether you have enough resources or not. Okay, what kind of resources? It goes back to what? It goes back to your 9M. All right. So I hope you can find what your 9M is. Okay. If we are talking about all this, okay, money, we're talking about this material, all right, all this marketing, okay, makeup, things like that. So these are basically the resources under your 9M. So you may need to look at that as well, whether that particular resources, okay, enables you to pursue with this particular strategy of yours. Let's say if you want to use IT, do you have money to do that? And do you have people who can actually, help you to do that? All right. So you need an expert to help you in that sense. Okay. You need the materials. For example, what are the materials that you need for IT application? All right. And then you need machines. Definitely you need computer system. All right. So these are the kind of things that you have to actually consider in deciding on the application of IT for pursuing your strategy. Any questions so far before I move on to the next part? Okay, okay. Those questions that are not relevant with this particular topic, all right, I will answer later, all right, towards the end. Especially pertaining to those asking on the how to actually answer the exam questions. All right. Okay, now will be like another part that is actually enabling the change will be e-business. So like I said just now, let's say, can you all hear me? I hope you can hear me. All right. Okay, like I said, okay, if you decided to engage, okay, when you talk about IT, okay, the using technology, basically one of the business model that you may want to consider will be e-business. So basically, if let's say you want to actually use the internet technologies, okay, for you to actually pursue with your strategy, it goes back to SAF for your evaluation. All right. So bear in mind, every time that you have to actually make your choices and you have to decide which particular choices or options that you want to go for, okay, it will always go back to suitability, acceptability, and feasibility. If let's say that you wouldn't want to use that, okay, you may actually use like maybe cost benefit analysis. So basically when you do your cost benefit analysis, you might actually be putting in some of the element of SAF as well. All right. So you can do that. So any question, okay, for the I think I'm running out of voice. Okay, so under this particular delivering e-business, okay, you have strategy models for e-business. So let's say if you actually decided to go for e-business strategy, okay, you are basically like applying your internal and external electronic communications that will support and influence your corporate strategy. So there are several areas that you have to look, you may look at, okay. Okay, these particular 8 areas where organizations should review and select strategic options for that. Okay, number 1 will be digital business channel priorities. All right, and then you have market and product development strategies, and you may also look into the positioning and differentiation strategies. You may want to go for business service and revenue models, and you may go for marketplace restructuring. Okay, these are basically the for this particular e-business. Okay, let's say you want to go for e-business. These are the 8 areas that you need to consider. Okay. You need to consider the supply chain management capabilities, whether they're able to actually support you with your strategy of using this particular e-business. Oh dear. Okay, sorry. Okay, and then another one will be internal knowledge management capabilities. Okay, whether you have key resources to help you, okay, into this particular into this particular strategy. And then you may want to look into organizational resourcing and capabilities. Okay, so these are the 8 areas that you may need to consider in order for you to actually pursue with this particular e-business strategy. Okay. And when you are comparing the traditional and the online branding, all right, basically, okay, when we talk about the traditional way of, kind of branding, it is you look into and, when you go to the shop, you can see the physical product that you want to buy, and then you can actually take it and, look at it and hold it. All right. Basically, if it's a book, you can flip through it. Okay. And then if, let's say, if it's clothing, you can actually, go for your fitting, whether it suits you or not, it fits you or not. Okay. These are the kind of things that you will do traditionally. All right. So, but when it comes to going for online, all right, these are the things that you have to actually think of. All right, you may need to actually make sure that, okay, that look and feel domain name is still the same. All right, so for example, some brand names, the moment that people mention that name, you are already associating it with that physical products. But now, if let's say you are moving into, all right, online business, okay, or e-business or e-commerce, definitely you will have a new kind of branding. For example, all right, a bookstore that we have here in Malaysia, one of the biggest bookstore as well. All right, previously it's known as MPH bookstore. All right, and since that there are many new bookstores coming up, and they start to actually embark into all this particular online business, so they have this particular online bookstore, I would say. So because of that particular change, okay, MPH does actually migrate to, not actually migrate, they do extend their bookstore business. Instead of just having a physical store, you can also buy the books online. So indirectly, okay, the brand name of MPH bookstore becomes MPH online. So you are extending that particular brand name to reflect that they are pursuing with a new strategy, and they are also pursuing into this particular digital business. Okay. And then if you're talking about a brand name of Apple, automatically like you will associate it with computers, anything with technology. Okay. But if let's say you are okay, people mention about, for example, like Adidas. Automatically, like at the back of your head, what you can visualize the physical products, and you are, if you ask me, okay, I'll be visualizing the sports center, okay, sport center that actually, okay, or sport outlet shops that actually sell this particular Adidas brand. But let's say you want to actually sell all this online, perhaps, okay, you may actually change the name to something like, add on to that particular physical store name, you will have like Adidas online. So basically, that's how you are going to have that particular online branding, all right? Making people know that, oh, I'm also selling it online. So once people know that brand, automatically that people will look for you on the website, right? So online branding is actually important. Once you have already started to actually use this particular e-business model, you have decided which one that you want to use. So you may actually start to actually create this particular online branding. You don't want people to associate your products anymore with the physical store, all right? So application of technology to support e-business, basically one of the things that you may want to look at is the value chain. Okay, under your value chain, what you have is that you have inbound, you have operation, outbound logistics, marketing and sales, then you have service. Okay, after that you have margin, and then you have your supporting activities. So basically, this particular primary and the secondary activities of your value chain can actually be further enhanced, okay? Because sometimes, okay, you may not be actually selling things online, but you may want to actually produce something that is of good or high quality, all right? If technology can actually help you, okay, in your business, or if let's say you are selling your business online as well, if let's say technology can actually help you to enhance your value chain, then by all means, okay, you can actually incorporate your IT system inside your value chain. For example, okay, when it comes to your primary activities like inbound logistic, okay, inbound logistic is basically what you're talking about, storing your raw materials, all right? So how would technology helps you in storing and in planning your raw materials? Perhaps you can have the inventory control system, okay, and material requirements or automated delivery or tracking that you can actually, okay, have in your inbound logistic, all right? So if you're talking about operations, okay, so if normally that you have, you have a human to actually, make that particular products, and you may actually want to have like a technology that uses robots or any sophisticated machines to help you in your operations. That means in helping you to turn your raw materials into finished goods. So basically this actually tells us that, okay, if most companies actually are moving towards this, especially manufacturing companies, okay, where most are moving towards industry 4.0, where you use a lot of robots in most of the things that you do that can actually replace the human being, okay, that can actually replace the routines of certain activities, okay. When something that is routine, something that is the same throughout, okay, those are the things that can actually be replaced, okay. So something that is structured can actually be replaced by technology, but what is difficult to be replaced by technology will be the unstructured, all right. So anything that is actually unstructured, so you still need a human to actually perform that particular activity, all right. And then the next part will be acquiring and managing suppliers and customers using technology. So basically this is what I was talking about just now about the customer relationship management, right? And then this also talks about what, okay, acquiring and managing suppliers. Okay, basically we're talking about what maybe you can have your how you're going to deal with your suppliers. Okay, you can also use like, you know, this particular technology as well. How? By using e-procurement. How does that work? Perhaps, okay, going back to your value, excuse me. Okay, going back to your value changes now. All right. So when you look at the whole process of turning your raw materials into finished goods, all right, and then that whole particular process, okay, if you're talking about, okay, keeping your your stock at the minimum level, okay, you wouldn't want to actually over purchase your stock, okay, your raw materials. Let's say if you don't have any demand, perhaps you may not want to produce and you have more stocks. So in order to keep it at the minimum, what a system can help you to do is that, okay, you may employ e-procurement in such that, okay, and at the same time JIT, just in time, that particular process of connecting between this particular production department and the store and then your supplier can be made, okay, online, okay, by having this particular technology. So automatically, if you are you need more raw materials, it will, like, you know, give a signal to your store to actually send it to the production department. And then let's say if what they have sent to the production department, okay, leaves the raw materials in the store at the minimum level, so it's time for them to actually replace it. So automatically, with just a click of the button, it will give a signal to your supplier, and supplier will know that you need the product, and automatically with just a click of a button as well, okay, will send people to actually send the raw materials back to you. So that's how it expedites, okay, your whole process, okay. And when it comes to actually customers, like I mentioned to you, it actually helps you out with your customer relationship management, okay. So why? Because you are able to actually communicate with your customer, okay, in various ways. For example, you can do a lot of promotions to them online, and then or you can use emails, okay, send them emails, and then at the same time as well, okay, you what you can do is that you are able to keep track on their last purchase and the current purchase, all right, and then indirectly you'll be able to promote them with your future products. If you're able to read the trend of your customers purchase or their purchasing behavior, you'll be able to actually anticipate what kind of products that you should actually be producing to make sure that you are able to satisfy all your customer needs. All right. And another aspect is that when you want to deliver e-business, okay, you actually need to actually incorporate, all right, e-marketing into your marketing strategy. For example, you still need your basic marketing strategy. All right, all this marketing mix that you have, you still need that particular basic marketing principles. All right. So, but on top of that, you need to have this particular e-marketing to be incorporated there as well. Definitely, you still have products, but the way that you are going to actually promote your product now will not be like before, okay, where you used to have like brochures, things like that, okay, it's no longer working nowadays, right? So because with e-business, you need to actually modify the way that you do your marketing. Why? Because you need to have this particular, to help you actually, you need these 6 particular elements, okay? Because if you don't have this, okay, it would be impossible for you to deliver your e-business. People wouldn't know about the products that you are selling, even if you're online, all right? So you need to have this particular marketing strategy as well, all right? So this 6, the components of 6 I's of your marketing model, okay, need to be incorporated in your e-marketing. One is interactivity. All right, and second one will be your intelligence. Another one will be individualization. And then you have your integration. And then you have your industry structure. All right, you may want to have your industry structure. And then you have independence of location. Okay, so basically you need to incorporate all this. What is interactivity? So basically interactivity is actually, okay, so when you do this particular e-marketing, you need to have this element of interactivity. What does it mean by this particular interactivity? So the moment that you actually, this particular person browse your website and then starting to look into your products, okay, even though they are not buying, okay, you'll be able to keep track of their activities, and then perhaps that, okay, you may want to interact with them later. You are able to get, okay, the information from this particular link of theirs. All right, so people go to your website and they ask for information, okay, so from that particular information, okay, you'll be able to actually at least capture things that they are interested in from your particular website. All right, and perhaps you may want to include in your websites that as they actually browse that particular product of yours, maybe like if they want to have like online chat just to ask something, you may have that particular icon there and they can click it there and get connected with the company. All right, or sometimes you are asked to leave an email, or sometimes you are asked to leave a phone number, for instance, for them to call you back. Okay, so the next one will be intelligence. So basically intelligence, okay, will be that, okay, your website, okay, should actually be able to capture, okay, customers perceptions about your products and your services, okay, and then at the same time as well, all right, you should be able to actually provide them with the information so that they will continuously to actually come back to your website. All right, so indirectly you will be able to keep track, okay, whether that same particular person, okay, have been coming to your website or not. Okay, you can actually count how many times they actually, have visited your website, but they are not purchasing anything, but they just like love to go to your website. So these are the things that you need to keep track, because why? You may want to have incorporate some individualization. All right, why? Because of this particular intelligence, you'll be able to know which customer actually, visited your website often. You are able to capture their perhaps email address, okay, or you will be able to actually track their locations. So in that sense, you'll be able to actually, provide them with some promotions, or make them actually visit your website more often. And at the end, once they start visiting your website, that's where you're trying to actually capture them so that they end up buying from your website. All right, so because of that particular as well, you need some integration. What are the kind of integration that you may want to put in? Perhaps, okay, you can have like, discount coupon, things like that. Okay, perhaps they are when they visit, okay, if it's the first time that they visit, maybe like, you're trying to tell them that you are going to get like 10% discount. If they visit again, trying to actually make them end up buying. So you need to actually integrate your e-marketing channels with other medium of marketing channels. Okay, like I said, okay, using this particular intelligence means your e-marketing, and by promoting them, okay, your products, if you know that which website and who they are, every time that they switch on the computer, okay, your advertisement will pop out. All right, so basically those are the things that you may want to actually incorporate in as well. Okay, sometimes you may think of your industry structure. Okay, what kind of structure that you want to have, because sometimes, okay, some companies, what they do is that when you have basically e-commerce, usually it cuts these intermediaries. But certain type of model of business, what they do is that, okay, you may not have any intermediaries, but sometimes they create their own intermediaries. Okay, perhaps the website itself, okay, is only for them to promote the products, but when it comes to purchasing, okay, they have created another, I would say, new intermediaries just to deal with the sales and purchase. All right. So when it comes to independence of location, we are talking about the ability for you to sell your products globally. All right, so regardless where they are, where you are, you still be able to serve your customer and still be able to actually sell the products to them. I don't know whether you have actually, experienced this, but sometimes if you're using Apple phone or any other phones, right? Okay, if you need some assistance, you can actually just call the customer service anytime, okay? You will actually be entertained by them regardless of location, okay? Okay, I would say so. Ahmad, you want me to explain on the industry structure, which was this just now? Okay, industry structure just now. Okay, under this particular 6I. Okay, simple example that I can give. Okay, this is a Malaysian example. Okay, there's this particular company. All right. Okay, usually when you have this particular e-business or e-commerce, you're actually buying from the seller directly. All right, there's no middle person. You go to the website and you purchase, and you don't have to go through a middle person. But certain types of the model that they have, okay, even if that you can actually buy to them directly, but this particular company, okay, they or organization, they wouldn't want you to go straight to them. Okay, what they do is they just do the promotion, things like that. Example, like one of this particular boutique here in Malaysia that sells scarves, okay, which is called as duck scarf, DUCK scarves. All right, so this particular duck scarves website, okay, what they do is that, okay, they are just promoting the products or the scarves that they have. And if you are interested in to buy that particular scarf, okay, they have created another intermediaries, okay, which they call it as a fashion valet. And this particular fashion valet will have the responsibility and role to actually deal with sales and purchase with the customer. All right. So this is what it meant by industry structure. Sometimes you don't have intermediaries. Okay. Sometimes you have intermediaries. Promotion is done by somebody else, but the sales and purchase is actually being performed by somebody else. But when I say somebody else, that somebody else actually created by this particular duck scarf. Who created that fashion valet? Fashion valet is under duck scarf, but they're just creating that particular fashion valet as their intermediaries. So the duck scarf website is just to do all these particular promotions. Okay, so I hope that's clear. Okay, another part here. Okay. So basically this is implementing strategic change. Okay, under this is the last syllabus area that we are covering. All right. But this particular syllabus area under implementing strategic change, okay, you actually have enabling success and strategic change. And then you have process redesign, and then you have project management. Okay. Oh, don't be overwhelmed by this. All right. Okay. I'll be sharing this in the WhatsApp group. All right. So this is basically the first one here, enabling success and strategic change. So in order for you to, okay, your strategy, to ensure that your strategy, okay, can be successful, okay, you need to actually make certain strategic change. And when you make this particular strategic change, you will definitely need to look into your organizational structure and internal relationship. What you have under organizational structure will be, okay, when you change, all right, that definitely will affect your organizational structure and internal relationship, all right. Why do I say that? Okay, this particular change would actually affect your organizational structure and internal relationship. For example, as simple as like, okay, if let's say you used to have like, you know, a structure where you have a manager, all right, you have your CEO, you have your line managers, okay, head of departments and your line managers, and then let's say you no longer want to have, okay, too many physical stores, so you decided to close some of your outlets, all right. Let's say you have many branches selling all this, so you decided to go for e-business, and then definitely going for e-business, okay, you wouldn't need many outlets, okay, because why? You decided that you are not going to actually sell like a traditional business anymore. So because of this particular reason, you need to close down some of your outlets, all right. So the implication will be that you have to retrench a lot of your staff. And when it comes to retrenchment, okay, remember, it's not just asking them to leave, okay. When you ask them to leave, okay, you need to actually prepare some compensation, that means some money, okay, for you to actually give them, because you are asking them to leave. So definitely that you need to give them some compensation. So there'll be costs involved there. But at the same time, all right, the structure of your organization will shrink, right? Maybe you don't need so many line managers anymore. You maybe need a few, but you may still want to retain a CEO. But the kind of activities that they have, okay, inside that particular organization is perhaps no longer like before, okay. So that basically how, okay, this particular change will have an impact on the organizational structure and internal relationship. However, sometimes instead of, you know, maybe initially you decentralize, now you become centralized, or perhaps now that you are centralized, you want to be decentralized. So these are basically how structure changes, all right, because of that particular strategy of yours. So when we talk about organization structure, okay, it talks about what? Responsibilities, communication and skills, and the types of structure that you may have. Perhaps, all right, from a functional structure now becomes a simpler structure. Why? Because from a physical store now becomes online, so you only need your physical store to store the products, okay, and most of the activities are done, okay, to sell the products is performed by only a few people. Perhaps previously, okay, you need to actually go out and deliver the products, and then the process of like purchasing things like that are more complicated. But with online, it is much simpler. Okay, one person just needs to actually look into their website to see the orders, and then can just give instruction to whoever that are in charge of the stock to actually, you know, help with the deliver of those particular products. So from a functional structure, that is actually big, and then now you shrink it down to become like, you know, lesser people, you may change into from functional into a simpler structure. Okay. And then, okay. Under internal relationship, okay, with the decentralization just now is dealing with this particular internal, in the internal relationship, okay. And then this particular organizational structure refers to this. Sorry, I think I was actually looking at different things just now. All right. So this one is actually dealing with this. And then internal relationship is actually looking to all the centralization and the decentralization. Okay. At this particular stage, okay, you need to know the advantages and the disadvantages of this particular centralization and the decentralization. All right. So basically, okay, when it comes to enabling the success and strategic change, okay, sometimes, okay, you need to actually go for collaborative networking. All right. Why? Because sometimes, like, okay, perhaps, okay, collaborative networking will make more revenue for you as compared to if you were to do it on your own without any networking or without any networking. All right. So what are the examples of collaborative networking here? Collaborative working here is in such that, okay, under this, you will have two actually that falls under this particular collaborative working. One is actually boundaryless organization, where you collaborate with external parties. All right. Here you collaborate. Okay. Boundaryless organization, you collaborate with external parties. Whether outsourcing, you use a third party to actually perform certain function of yours. All right. So hollow structure is actually where you outsource your non-core processes. All right. The core processes remain in the organization. Okay. All right. And then the non-core resources actually will be outsourced to someone else. Okay. When it comes to non-core or core, core processes are the processes whereby, okay, it is actually tied up with your customer. All right, those are your core processes. Anything that deals with your customer. All right. So under modular structure, production process are actually outsourced. Okay. So the rest of the activities will be performed by you, but when it comes to production, you are the one that is, okay, that's the one that you are going to actually outsourced. I think quite a number of business nowadays, okay, that are actually using, some are using hollow structure where they actually outsource the non-core processes, and then they actually, some are also using the modular structure. Okay, for example, don't be surprised, okay, if you see like certain products, even though the design are made in the US, but you see that, okay, designs are made in the US, but suddenly you see that made in China or made in Taiwan, things like that. Okay, what happens here is that, okay, some branded products, you'll find that, okay, it's designed in that particular country, but when it comes to making, it's not made by them, it's not made in that particular country, it's made by other countries. For example, they outsource some of those particular production, okay, perhaps in a factory in China, So that's why you see that even though, okay, the designs are actually a US or Australian designs or whatever designs, okay, your own country's design, but when it comes to making it, all right, you'll see that it's actually made in China or Taiwan or whatever countries that you have. Okay, so that basically you are outsourcing your production process. Non-core process usually like, you know, payroll, things like that. So you ask someone else to actually you outsource that to other companies. Perhaps you may want to actually outsource this to shared service companies where they are only dealing with human resource. So this particular shared service that gives, okay, human resource services will be actually handling your human resource activities. Okay. You may also have networks, okay, where groups of your organization cooperate to deliver services, all right? And then you may also have like virtual structures, okay? The network of your organizations are actually only linked with via technology, okay? So basically, we are talking about, I would consider like Amazon, they are virtual structure, all right? So you'll see that if you buy certain things, they have actually supplies from various parts of the world. They are all connected via technology, okay? Simple example, same goes to like, you know, Lazada, Shopee, things like that, okay? So these are actually a virtual structure kind of organization. Give me a minute. And then another, what you have, another one is that okay, I forgot about this. The network. Okay, the network just now. Okay, groups of organizations cooperate to deliver service. Okay, for example, to build a house. All right, perhaps the contractor will actually build all this particular foundation, the structure. But when it comes to wiring, you will ask someone else to do it. All right, so you cooperate. So you have a friend who will be doing the wiring. And then when it comes to all this plumbing, things like that, so you have another friend who will be doing it. So like, so you are having this particular cooperation. Okay, the three of you will be actually helping one another to build one particular house. Okay. Outsourcing, use a third party. Okay. So you may want to outsource. Okay, offshoring. Okay, outsourcing be divided into three types. You have offshoring, you have shared services as also shared servicing, and then you have global business services. All right. So outsourcing in a different country is called as offshoring. All right. And then shared servicing, okay, consolidate transaction or processing activities. So this one, like I mentioned to you, okay, like here in Malaysia, in a place, okay, we have like shared services. Okay, this particular shared services company, what they do is that they manage the accounting activities or accounting services, okay, accounting transactions of a company, okay, in the US. So what they do is that, okay, whatever financial transaction, okay, the shared service company here in Malaysia will be doing it, but the client is actually in the US. So if they are managing the finance function of this particular US company, and they basically will work according to the time in the US. Okay, so this particular shared service company, they are also considered as like an accountant for another different companies. So they will have people who will handle accounts for different companies located at different countries. All right, you can have or can be in the same countries, but it's a different type of companies that you have locally. Okay, another one is global business services. Okay, basically, okay, global approach to shared servicing and outsourcing. Okay, uh, it is the same like shared services that I was mentioning to you just now. Okay, basically, okay, the one I was talking about to you. Okay, when it comes to like dealing with people from various parts of the countries in the world, it is called as global business services. But usually when it comes to like consolidate transaction, okay, processing activities, that is also called as shared services. And sometimes if you have many branches as well, all right, and then those dealing with the transaction processing activities, okay, will only be done by perhaps one particular only done in the holding in the headquarters or the the main company, right? Any questions so far? Okay, so if do you all need a break? Somebody was asking me for a break. Maybe you can take a break for a minute. All right, let me cool down my voice first. I think I need to cool down my voice. Okay, somebody is actually saying there's a noise problem there. Sorry for the coughing. All right. Yes, dear, it's a break, just a short one. All right. All right, let's come back. Okay, another part, okay, under this particular enabling success and strategic change that we want to look at will be the performance excellence. What is actually this particular performance excellence? All right, okay, you may have actually, okay, other types of, you know, performance excellence framework that people use actually to actually get recognitions on their performance. Okay, so basically, okay, this is actually a way, okay, for you to actually make sure that, okay, your strategy works. So it's all depending on the strategy that you have. Okay, this is a mechanism where actually, okay, if let's say a company wants to achieve a good performance or a high performance, and because this good and an excellent performance, okay, can actually build up the reputation of the company, okay, giving them a good image. So basically, with the awards that they actually receive by fulfilling the criteria spelled out by the performance excellence framework, okay, indirectly, if they receive this particular award, okay, it's like boosting the reputation. Oh, this company is receiving award for performance excellence. So this company must be a good company. So people start to look into the company, you know, and then perhaps once you're able to build that particular image, indirectly you are trying to actually build up your presence in the market. And people knows you, so curious people will actually like to know more about you. So that's where you can actually market your company. So one of those performance excellence that we have, okay, is actually Baldrige model. All right, Baldrige criteria for performance excellence. Basically, is okay. Baldrige criteria is not the only one. Okay, you actually can Google. There are many types of performance excellence, but basically, this Baldrige criteria is a performance excellence framework from the US. So if let's say you want to be considered as good and being awarded for performance excellence by them, all right, so you may need to actually, okay, look into these particular elements of leadership, okay, strategy, customers, measurement, workforce, operations, and at the end, analyze, okay, the performance and giving you the results. Okay, whether you have performed excellently or not. So the elements of leadership is actually looking into, okay, the role of senior leadership, okay, looking into the governance and social responsibilities, and looking at many other elements of leadership. All right, so this leadership criteria will actually evaluate the level of leadership that a company has. Okay, so they have like, you know, a medium of, you know, some sort like kind of like a questionnaire, things like that. Okay, that they have a document that they have to actually fill up, okay, to tell whether they have whatever that is required by those particular criteria. So if they fulfill it, so it means that they perform well. So if they perform well, okay, they will be awarded, okay, that particular performance excellent. So indirectly that will actually boost their image. Okay, so good image will always be good for the company because it actually builds up the goodwill of the company. All right, people start to notice your presence in the industry. So If people start to notice your presence, it means that, okay, you are already, okay, almost there towards moving to, towards the direction that you want. All right. It's like before this, I don't know you. Now I know you. So if I know you, that means, you know, I must actually look at the products that you are selling. Perhaps if it's good, it's really good, until that you are being awarded a performance excellence award. So I may want to actually try out your products. So indirectly, you are marketing your organization. All right. Oh, where was I? Oh dear. Okay, someone's actually asking measurement in the performance. Okay, when you talk about measuring the performance, it means that, okay, we want to see whether you perform well or not. Okay, in order for me, for your performance to be measured, all right, you will look into these particular elements that you want to measure. For example, in this particular Badrich criteria, all right, they will look into leadership. So this is one of the measurements that they will look at. All right. So to see whether your leadership is good or not in your organization, so they will look into several things like role of senior leaderships, governance, that they're going to look into your, okay, whether you have you are practicing good governance in your organization. So basically those are the measurement in the performance, okay, to measure your performance. So if, let's say, you fulfill all the criteria for all these elements, all right, so you are considered as performing excellently. All right, so that's what it is all about. Empowering organizations. Empowering organization means that, okay, you are giving the responsibility to your workers to actually set their targets and how they are going to actually achieve their particular work targets. Okay, so you are not the one who is actually going to set the targets for them, so you give them the room for your workers to actually set their own targets and then achieve that particular work target of theirs. Okay, so in order for you to actually be able to be an empowering organization, all right, you need to create this particular culture, and this particular culture should actually be uh, should actually be adapted, okay, can be adapted by your workers. Because why? Sometimes if, let's say, your workers are not used to actually making their own targets, so it's not going to be that easy. So you may want to actually create a culture for them to actually be able to set their own targets and achieve those particular targets, and making sure that the targets that they set are, okay, in congruence with the target of the organization, so that, okay, there will be no conflict of interest. And basically, in order for you to achieve this empowerment, okay, you really need to give some freedom to your workers to do all that, okay, and not just changing the culture. Sometimes, okay, the approach to HR in your organization should actually make sure that, okay, whatever HR policies or rules or whatever for the especially appraisals that they have, okay, should actually be looking into the ability for the workers to set their own targets, okay, are able to actually make their own decisions, okay, related to their work. So if they are able to do that, that means and achieve the targets, so they perform well, so they deserve to be rewarded. All right. Another one is talent management. Talent management is actually very important. Okay, always remember. All right, you have competences and resources, and then your competences and resources is actually your source of competitive advantage. Okay, so when it is your source of competitive advantage, so you must make sure that your resources continuously to be unique resources, and then you should actually be able to create your core competences. All right, because these are actually your source of competitive advantage. So people can is one of your resources. Okay, we are talking about a human capital. So human actually playing the role, or actually those that actually make a company works. Okay, if it's just a company, no people inside there, definitely nothing functions. So if the people are your source of competitive advantage, so it means that, okay, they have a talent that enables, all right, the organization to move forward with the existing competencies that they have. And because of that particular reason, you may want to actually make sure that this particular person, okay, will continuously work in your organization, and definitely you have to take care of them because you find potential in them, that this particular person, okay, can actually replace you in the future. If you're the CEO, you find that this particular person can actually replace you in the future, or he or she can actually replace any key people in your organization. So if you find that they have that capability, so what you can do is, okay, you may try to coach them, making sure that they acquire necessary competencies and skills so that they will be able to move forward. Okay, okay. So then once they're able to actually move forward, and at the end, once you leave, okay, you have your successor. All right. So basically, talent management is a way to actually mobilize or execute your succession planning, because while you are trying to attract new talent, new people to actually move up, okay, so that they can actually be the key people in the organization. They may start as a junior staff, but if you feel that they have a talent to move up, so perhaps the HR department can actually look into the career path of this particular person, and then you as a head or the CEO should actually plan for the succession, just in case that you leave or any of the key people leaves, you have someone to replace them. All right, so this can actually be done through coaching, networking, and communication, and involvement with the board and the key customers. All right. And the next part is strategic change. All right, if let's say you need to actually change, you need to understand first the scope and nature of change. All right, why? For you to be able to identify the type of change that is required to be done. So these are the example of the type of change. Basically, if you don't mention the word, all right, Balogun and Hope-Hayes, this is Balogun and Hope-Hayes model actually. Okay, so to look into the need for change, so you will be analyzing or assessing the scope and the nature of change, because once you actually look, okay, analyze this particular scope and nature of change, you will be able to know the type of change that you should be making for your organization in order for you to actually uh, have your strategy to be implemented successfully. All right, so if let's say you did not mention this Balogun and Hope Haley, and if you think that this particular model help you, you can just use what? Just analyze the scope and the nature of change. And then that will actually determine the type of change that you may want to adopt, like adaptation, reconstruction, evolution, or revolution. All right. So basically, what are the scope of change? When it comes to the scope of change, all right, you will look into whether the scope is actually realignment or transformation. And then when it comes to the nature of change, you will look into whether it is incremental or big bang. Okay, the analysis of this particular scope of change and nature of change will tell you the type of change that you need to make. If it is realignment and increment, okay, the scope is realignment, and then the nature of change is incremental, that's where you need to adapt. Okay, it's adaptation. The kind of, okay, the type of change that needs to take place is actually adaptation. If let's say the scope of change is transformation, and then the nature of change still the same, incremental, then the type of change that you must have is evolution. Okay, and then if let's say the scope of change is realignment, and then the nature of change is big bang, then you may need to reconstruct. Okay, you need to perform a reconstruction. And if the scope of change is actually transformation, okay, and then the nature of change is big bang, so it is revolution. All right, so basically adaptation is actually, you know, this is actually a step-by-step kind of change. Okay, a small change. All right, and then when it comes to reconstruction, it is actually, okay, requiring you to do some rapid and extensive action. All right, for example, okay, if let's say you don't want you to lose so much of profit, then perhaps, okay, the kind of reconstruction that you need to do is to, okay, see whether you are able to cut your cost. All right, in evolution is actually an incremental process that leads to a new paradigm. Okay, so this is basically, it is actually transformational in nature. Okay, so okay, So let's just go back. Okay. Evolution is actually an incremental process, okay, that actually leads to a new paradigm. All right. So basically, when you have this particular evolution, it will result in something that, okay, when it changed, that you will learn something out of that particular change. So it provides you with some kind of a learning process, okay, when you undergo this particular evolution. Revolution is actually extreme change, okay. It puts a lot of pressure to the people under you. And then basically, okay, strategic drift. If you can still remember the word strategic drift, okay, let's say you found that, yes, the strategy that you have already formulated earlier does not work at all, right? You may need to actually re-strategize, and you have to, like, throw away that old strategy and try to come up with a new strategy. So this results into extreme change, and then it actually can put a lot of pressure in terms of that particular process of change. All right. I hope you all outside there still survive, okay, by listening to me. Like almost kaput to talk. All right. Okay. So I hope you all are all right outside there. Okay. So when there are changes, you need to look the contextual features of this particular change. Okay. So basically, you will look into the time. So what you will look into will be, okay, if you're talking about, okay, the change that will be taking place, okay, you may need to know how long would it take for change to actually take place. All right. So you need to look at that particular aspect as well, because there are some changes that can't be performed overnight. It takes time. Okay. So these are the things that you need to look at, because why? You need to know how long that the change would actually take place. So you may also want to look into preservation. Okay, perhaps, okay, when you are changing, okay, definitely it will affect certain parts of your organization, like, your culture, okay, the way that you work, okay, your work culture may be affected. So you may want to look into that particular work culture, okay, which work culture that you can still preserve, which particular work culture you think that needs or requires change. And then you may want to look into diversity as well. All right. Why? Because, okay, diversity, okay, is much better than homogeneity. So if we are talking about diversity here, whether you want to actually hire people from various backgrounds or certain type of backgrounds, okay, to actually cater for this particular change. So usually, okay, having people from diverse background will actually help to enhance further, okay, the decision makings that you have in your organization, or whatever practice that you have in an organization perhaps can be actually improved further. Why? Because people with various background will be able to give you various, like, ideas on how you are able to actually move or move on with whatever changes that you plan for. All right. So you may want to look into who are capable of doing it. All right. And then the capacity of doing it, how ready you are, any resistance or not. Okay. So basically, okay, you will also look into the power, what it means by the power and scope here is that to what extent that you are able to exert your power. If let's say, okay, people just doesn't want to move on with the change, perhaps you can actually use your power to force them to change, or there's another way whereby you can actually educate them first, right? So basically these are the aspects where you need to actually look at it. And always remember that, okay, when you change, okay, when you decided to change, okay, your organization decided to change, decided to pursue with that particular change, okay, remember when you have a strategy, definitely you have to change something, all right? So let's say you decided to actually apply a new technology, for example, all right? So that change that you decided to actually take place definitely will have impact on organization, processes and procedures that you have in an organization. Definitely will have impact, okay, on the organization, sorry, on the people in the organization. And then definitely it will have an impact as well on the existing IT system. All right. So if you pursue with that particular changes, make sure, all right, you analyze this particular impact first on these particular 4 things. Okay. Once you know the impact, all right, then you'll be able to know what to do next. Okay. So how would actually, for example, change from a normal business to e-business, for example, how would it affects your organization? So you need to actually spell out clearly how the impact would be. A clear example, perhaps you may actually reduce the number of your staff. So you might have to let go some staff, right? That's how it affects your organization. You may downsize, right? You may close down your physical outlets. So you actually need to spell out what are the impact. Okay, and whatever impact that you give, it depends on the case of the question. All right, so different case would have different impact because why they have different nature of business and they have different stories inside there. All right, and sometimes it may affect the processes and procedures that you have inside the organization. All right, whether do you actually need to change the whole process or part of the process, or which particular process, okay, that actually affected. And then when it comes to people, all right, who are actually affected, okay, who are affected severely, who are less affected, okay, who are not affected at all. So these are the things that you need to actually spell out clearly. All right. So whatever that you put in as the impact of those particular changes, remember this is SBL. It's a case study question. So whatever that you want to put inside as the implication will have to refer back to the case study. All right. And same goes to the IT. All right. Let's say you want to implement new information technology. So you may need to look into how would it affect your existing IT system. All right. So if it requires the changes, what are the kind of changes that you need? How would you change and why you need to actually change it? So these are the things that you need to actually look at. Okay. Once you know that, okay, what are the changes? How are they affecting the organization? Why are they affecting the organization that way? Then you will be able to actually, okay, find a way to make sure that that particular change works and takes place. So one way for you to do that is by looking at actually Lewin's three-stage model, okay, basically this actually help you, okay, to look into how you can actually mobilize the change, okay, how you can actually execute the change. Firstly, okay, Lewin looks into unfreeze. Okay, the purpose of unfreeze here is to weaken resistance. Okay, remember that, okay, you already know from your pulpit, all right, from your pulpit, you know what are the implications, how are those affecting them, and why is it affecting them that way. So indirectly, all right, you will know, you have to find a way to actually weaken the resistance if you find that if people that are affected by that particular change do not want to actually pursue with that particular change. They don't like it and they don't want to actually follow you with it. Okay, so there's resistance there. So what are you going to do? How are you going to weaken this particular resistance? There are basically several ways for you to actually weaken this particular existence, all right? What you can do is either you, okay, if it's the hardcore, people, so you need to actually talk to them, explain to them nicely that why, all right, company has got to change and why they have to change together with the company, all right? So in order for you to do that, all right, what you need to do is you try to actually let these people learn whatever new techniques or the new technology that are new practices that they are required to do. Tell them the importance of it. Okay, let them try out first. All right, so move them, actually try to move them from their daily routines so that they will be able to, okay, see what the change actually and able to give what change, what are the kind what the change are able to actually give them, okay, the implication of the change on them, okay, you are hoping that they are able to see it, all right? So you move away from the routine, make them do or perform that change, try have a feel on what that new change is all about. So if let's say they are still, okay, resisting, perhaps, okay, you can like slow talk to them, okay, use your logical sense on how you are trying to persuade them to follow through with the change, all right? And if let's say you are not able to do that, perhaps you may want to ask someone who have more power to do that, all right? Perhaps the HR to help you to do that. And then the worst case scenario is, right, if you just have to force someone to actually move on with the change, then why, you just have to do that, all right? So basically you are trying to actually bring them away from the routines and try to get them adjusted with the new change. And once they are able to do that, okay, one way that you can do that is, all right, let's say if you, the company decided that, okay, everyone must actually be wearing uniform to the office, the same type of, okay, clothing for everyone. Some people may not like it, right? But what you can do is that you may want to actually, you know, give a free uniform for everyone. And then what you try to do is that perhaps you can actually suggest that, okay, they start wearing the uniform only on one day. Then once they are comfortable with it, start to increase it, okay, to 2 days. So once they're comfortable with it, okay, and then when you decided that, okay, you want them to wear it every day and they have started wearing it every day, so make sure, okay, unfreeze is actually giving them some grace period to adapt, all right? So once they're comfortable wearing the uniform, then what you do is start changing. I mean, that is the transition stage. So now you can tell them starting from like May onwards or June onwards that everyone must start wearing. Okay, there's no longer wearing in certain days anymore. Also, you need to actually wear it every day starting from that particular certain days, like from May. So when they start wearing during that particular starting from May, so that's where, okay, it's a transition that takes place. Give them some grace period, all right? So once they start wearing and they start comfortable, okay, every day starting from May wearing it, and if you see that they are already okay into it, then you start to stabilize that particular new state, all right? So perhaps you say that you're going to start in May, so grace periods like maybe May, June, July, and you may want to have rules that, okay, after July, nobody is actually allowed to wear any other type of clothes unless it's a uniform, right? So you start to stabilize that particular new state. When if there are change again, then you go back to unfreeze, then go for change or move, then refreeze again. So that's the whole process of, okay, making change work. All right. Okay, or I would say, okay, making change successful. Okay, almost like speaking in Malay just now. All right. Any questions so far? Come, that particular panel doesn't go out. Okay, let me see. Wow, you're so good tonight. Nobody asked question. I think you have understood clearly, isn't it? I hope so. Okay. Don't tell me you all are dozing off already. If I keep quiet for too long, you better wake me up, all right? Okay. If I say I doze off, I think I may. It's already like 11:20 already here, okay, at night. Okay. A minute break. Let me have my drinks first. If we can have insurance for our voice for lecturers, I think I'll be the first one to take that particular insurance and transfer that risk to the insurance company. The risk of losing my voice. Okay. All right. Okay, let me see the question. All right, thank you. So hopefully you, okay. All right, so one of you actually is actually asking on transnational organizations. That means, okay, basically a transnational, okay, organizations is like, you know, how would I say, it's like combining, okay, some of the independence for the national units with certain functions that actually are run globally. Okay, for example, World Health Organization. Okay, so if you're talking about World Health Organization, I would find that as a transnational organization. Why? Because, all right, in certain countries, all right, for example, like in Malaysia, the World Health Organization in Malaysia, the function, okay, this is actually shared by the whole country. That means the whole nation. Is that the function is actually is the human resource function here, whereby they are the one who actually paying salaries to all the, like, you know, workers or the doctors that are operating in other parts of the world under WHO. And then in certain countries, you have them having the R&D for certain types of, you know, coming up with certain types of medicine or to study on certain type of diseases. So basically, right, even if you are from Malaysia or you are from Pakistan or you are from India, okay, when you talk about, okay, doing a research on certain disease, you will go to WHO in one particular country. All right, so that is actually basically, okay, what a transnational organization is all about. That means perhaps, okay, a certain specialized function, okay, it is based in particular one country, but they are used by all territories. So this is basically what trans organizations means. All right, so STAR means successful ones. Okay, let's go to the next part. That is actually process redesign. So if you still remember what we had earlier on, okay, remember that, okay, what you have done here under your pop-it here, okay, let's say, okay, one of the implication of the change is actually affecting the process, right? So you require process are affected, and this particular process need to be actually redesigned or redo, or need to find another different way of processing it. Okay, so what it means is you need to change this process. So that's where process redesign comes in. All right, so from your pop-it just now, you have already analyzed, okay, one of those are affected are actually process. So now we are doing the process redesign. So in doing this particular process redesign, okay, you will look into the organizational process, and at the same time, you are going to evaluate the existing organizational process, right? So, oh, hold on. Okay, when you look into the organizational process here, okay, you will be looking to what actually triggers, okay, for this particular process redesign to take place, and it may come actually from your internal and external development. Okay, so once you know that, all right, then you may want to evaluate next your existing process. And in doing so, you may need to perform a gap analysis, okay, looking into the current process and looking into what your desired position should be, or what would be the desired process that you want to have at the end. Okay. And once you have done that, then you may also, okay, the next thing that you will do is to look to look into the needs for a holistic. You need to perform a need. Okay, there's a need for actually a holistic view. Okay, you need to actually consider how activities and resources interact here. Okay, once you know what your current position is, okay, what your desired position is, okay, your current process and your desired process. The next thing that you're going to look at is the resources that you require, okay, for you to actually move from that current position to the desired position. And you need to look into the activities that you have, okay, that you need to do, activities that you need to do, okay, to actually move from the current position to the desired position. All right, and then you need to know how these particular activities and resources actually interact. For example, all right, let's say if my current position now, okay, the whole process that I'm having is actually done manually, okay, and the strategy that I have just now is like I want to use IT, okay, so in my process, so that I can enhance my processes, so there's no longer, you know, manual processes anymore, so it will be a computerized process. So my current situation is actually now a manual going into desired process, okay, desired position is the computerized. All right, so what I'm going to look at will be what will be the activities involved, all right, from transforming that particular manual process into an computerized process or maybe automated process. And then at the same time, okay, once I know what are the activities involved, then I may want to look into the resources as well. Okay, the resources will be, what do I need? When I say what do I need, all right, it's not just about the machines that I need. It is also about the people, all right? So how would actually people who have already performed this particular process will actually be affected by the change into that particular computerized process. All right, so once I'm able to see that particular activities and the interactions, and I will be able to know how to actually manage that. All right, so in order for me to know how to actually manage that, all right, so from this particular current position to my desired position, okay, so I want to, okay, the thing that I may need to do is like, okay, the next thing is that, okay, is it worth it for me to do that? Okay, because I know what are the activities involved, okay, how much costs that will definitely be involved, and then I may also know the resources there that involve, so I may also look into the cost and the benefit as well. So because of that particular reason, all right, I may have to establish the business case and benefit first, okay. Why? Because is it worthwhile to actually, is it worth to do this particular process redesign? Okay, once the management decides whether to undertake or not, only then, okay, I can think of the rest. If let's say the management decided not to pursue with it, then I will just stop here. That means there's no process redesigning taking place. So let's say, all right, the management decide to pursue, okay, with this particular project. Let's say you have several processes involved. Are you going to actually change the whole of the process, or are you going to actually change one process at a time? So it's all depending on your resources. Okay, it's all depending on, okay, the interaction between your activities and the resources first, or perhaps you want to pursue into something that is easier first and then moving into something that is difficult. Okay, so all that will be depending on your number 2 here, and at the same time, okay, your number 3 that will actually be making the final decision. Okay, among the ways for you to decide actually, okay, what are the kind of process redesign that you should be undertaking, okay, is by applying this particular Hammond's process strategy matrix. Even if you don't actually mention this, okay, but you want to use this particular model to help you in answering your questions, you may actually just mention that, okay, in order for you to do that, you will actually look at the level of complexity of the process and the strategic importance of that particular process, right? So basically, with low complexity and low strategic importance, processes will be automated or outsourced. What does it mean by strategic importance? Any processes that relates to your core business and that relates to your customers, that is of strategic importance. Why do I say that? Because your customers is actually your source of revenue. Okay, so anything related to that, okay, that will be the strategic importance process. So if let's say it's low complexity, low strategic importance processes, so that process will be automated or outsourced. And if let's say it's low complexity and high strategic importance, okay, processes, right, you may want to automate. And if let's say it's high complexity but low strategic importance processes, that's where you may want to actually outsource. And then if it's high complexity and high strategic importance processes, that's where you need to improve. Okay, and this particular last one is actually, okay, a process that if you say improve, that means this can actually contribute to your competitive advantage. All right, a process that can actually contribute to your competitive advantage. Okay, process redesign option. Okay, there are several ways which you can actually redesign your process. Okay, you may want to do some re-engineering. All right, perhaps you want to restart the whole process from the scratch. All right, or you may want to actually do simplification. All right, where you actually eliminates redundant processes elements. Okay, so if you think that, okay, the process is too long, and by cutting certain steps in the process doesn't make any difference, so perhaps you can actually cut that particular steps that you have. Okay, this is what we mean by simplification. So if the procedures is actually taking 5 steps to do, if you cutting 2 of that particular steps doesn't make any difference to your output of the process, then by all means you can do your simplification. All right, value added analysis actually eliminates activities that do not add value. So anything that does not add values, okay, to your process, then just forget about it. All right, So if you find that any of the process, okay, results with duplication, okay, things like that, so you may just want to get rid of those. And you may also want to undertake the gaps and disconnects, okay, options for your actually process redesigns. What this means is that, okay, you are targeting problems at departmental boundaries. What it means is, okay, let's say you decided to have an integrated system in your organization, and then that particular integrated system is supposed to be linking, okay, your process from one particular department to another department, and basically the whole department are integrated. So once you want to integrate your system, okay, you must make sure that if, let's say, the system are being actually, okay, you have already redesigned it in department A, and whatever output in department A should be able to be received by department B. If, let's say, department B are not able to receive that output from the integrated system, then that's where there's a gap and you have to disconnect. Okay, that means you have to restart again and go back to your redesigning in that particular department A. So if, let's say, your system are able to be, okay, captured by the department B, and then now you start looking into department B, and the output of department B should actually be able to be transferred to department C using the system. But again, if it can't, then you need to, that means there's a gap and you need to disconnect. So your successful process is actually already between A and B, but the one that is unsuccessful is as between B and C. So now you are going to actually look back into that particular process, redesign between B and C. Okay. And the next thing that you're going to look at will be the areas of feasibility. Okay, when you make any of those changes, okay, are you able to get support technically, okay, socially, and environmentally and financially? So if you are able to actually get supports from this, then only the I would say the process to redesign is actually feasible. Okay. So basically, this is a process for redesign. Okay, once you actually can actually, okay, it's feasible, so you decided to actually redesign your process. So these are the method for you to actually do your process redesign. First, definitely you need to do some planning. Okay, what's your goal of redesigning? Okay, the scope of your process that you want to redesign. Okay, and definitely you need to look into your existing workflow. Okay, so your existing process, okay, your workflows, okay, whatever problems that you have identified, then redesign plan that you have to actually come up with, right? And then you start to design the new process. And then after that you develop, okay, once you have done it, and then, okay, the next thing is, once the process has already been developed, the next thing is to actually implement it. But it wouldn't be that easy, because in the process of actually developing and in the process of transition, okay, you may need to do some testing to see whether it is successful or not. All right, if it's not successful, then you have to go back and to redevelop it. Okay, so you need to actually, if it's a system, you need to test run it first, okay, to see whether the migration from the old system to the new system is actually successful or not. All right, so once it is successful, then only you move towards your new system, okay, or your new process. Okay, so basically that's what process redesign is actually all about. Last but not least, okay, the final one that we have for the implementation strategic change is actually on project management. Okay, let me move and finish up this first. Okay, then I will look into the questions that you post if you have any question. Okay, so using project management to actually implement strategic change, okay, you need to know what project management is all about. All right, so project management is like, you know, it has a start date, it has an end date, right? So basically, you undertake a project because of certain reasons, okay, because there are goals that you want to meet, okay, whether it is actually cutting costs or increase revenue or, okay, achieve a certain a certain quality, or basically this actually, okay, what a project is all about. And then if you talk about project management, is how you are managing, all right, system, technique, and people that are used to control and monitor activities, okay, that you activities undertaken within a project. Okay, so basically that's the what project management is all about. And you will actually be you must make sure that under project management as well, you should be actually be aware of this particular triple constraint. Why? Because project management is actually full of project challenges. Among those are, okay, on top of risks that you faced, all right, so basically you are faced with this particular three constraints, that is scope, cost, and time management. So it is actually very crucial for you to actually make sure that you are able to fulfill these particular needs for the scope, all right, within the cost and within the time. Because if, let's say, okay, the scope of this particular project keep on changing, okay, you are actually having a scope creep there, all right? And then if, let's say, your costs keep on increasing, so you are facing cost overrun, all right? And let's say you are not able to actually deliver your output on time, so you are facing what? Project slippage, all right? Okay, so let me just put here. I don't think so. I have actually put, okay. Basically, oh dear. Okay. So if you actually don't take care of your this particular triple constraint, scope, in terms of scope, cost, and time, it will lead to scope. Okay, never mind. Scope creep. All right. Cost overrun, and then slippage. Right? That's the danger of not focusing on this particular triple constraint. All right, so it will lead to scope creep. Okay, it will lead to cost overrun. That means you are spending a lot. Okay, and then slippage means you are not able to deliver your project on time. Scope creep means, okay, the specification keep on changing. Okay, because of that, that's why perhaps you have to incur more costs, and then that's the reason also why the project is delayed. All right, so we want to avoid this. All right, so that's why we want to have a better plan for our project management. Okay, so basically when you talk about projects that you have, okay, project selection, we will still go back to self, suitability, acceptability, and feasibility. Okay, once you have actually decided on which particular project, all right, that's where you need to start with your project initiation. All right, so under your project initiation, you need to do some pre-initiating tasks. All right, what the purpose is to set objectives, select project manager, okay, identify who your project sponsor are, okay, are or is, okay. So sometimes project manager can also be the same person, okay, as a project sponsor, okay, and sometimes they can be separate people. And then you also, once you have done that, so you need to know the role of this particular project manager and project sponsor. Basically, okay, project manager will be responsible for the whole project, all right, to make sure that, okay, the whole project is actually delivered on time, okay, no over budget, all right, and then meet the specification of the customers. And then, okay, in this particular project initiation, okay, you need to do some initiating tasks. Two things. One, you have to prepare business case. And then another one that you need to prepare your project initiation document. Basically, the business case is actually, okay, to get approval, okay, from the top management for them to actually agree and consider to pursue with this particular project. And once you got that, and then the next thing that you need to do is, okay, project initiation documents. So basically, it gives authorization for work to be done and resource to be used. So your project initiation document should be actually detailed, all right? So when it comes to the project initiation document, okay, basically what you need to have inside there will be the project title, all right, project purpose and objective, project start and end date, all right, details of the project sponsor and project, authorization by the main stakeholders. And you may also want to include inside the outline, schedule of work, budget information, okay, outline of project scope and work sequence, or details like the roles and responsibility of whoever that actually involves in that particular project. All right, so it can be detailed, or some perhaps can preparing it not as detailed as that, but it's good to have a good PID, because the purpose of PID is actually, okay, it is also called as actually a project charter, basically, all right. So it complements your business case, all right. So project, this is also, this particular project initiation document is very important for internal communication within the organization, because it spells out what they are supposed to do. So if they, for example, if they actually, not aware of what they are supposed to do, they can actually refer to PID. So inside that particular PID, there's already, okay, all those particular information that is needed for them to pursue with this particular project. Okay. And then, okay, the next thing that this project cost and benefits, basically this project cost and benefits is actually part of your elements that you must have inside your business case and to be extended into your PID. All right. So under your project cost and benefits, you need to identify your benefits. Okay. what your benefits are, and then at the same time as well, okay, you need to actually measure your benefits. Okay, how to measure benefits? Benefits can actually be measured into 4 types. Okay, some are observable, that means you can see observable benefits there, you can only see, right? Some are measurable, some are quantifiable, and some are financial benefits. Okay, so you need to actually categorize that into these particular 4 types of benefits. Okay, and then the next thing that you may want to do is you may need to identify the cost. Okay, what will be the capital expenditure for that particular project, and what will be the operating cost. All right, definitely when you talk about building a house, you may need to actually have, like, you know, all these particular machineries to help you to do that. Okay, so those are your capital expenditure, and you may need to hire workers, so that will be your operating cost. And then once you have identified both of these benefits and costs, at the end you need to do your cost benefit evaluation. All right, so once done, approved, so now it's time to start. So basically you need to do your project planning. Okay, what you have inside your project planning will be, okay, you may need some planning tools to help you in project planning, because this is the time that you're going to break down your work from the PID. You're going to work on it, then you start to make your project planning. All right, that's where you need to break down all the work to be performed and the resources associated to it. All right, and then make sure you have your milestone. All right, and then you have your, you know, basically the whole process that you are supposed to be performing. So everything must actually be put in detail inside your planning. Okay, the things that you should be doing to make sure that, okay, from the start date to the end date, all right, all activities that you are supposed to be doing are all inside your project planning. All right, including, okay, how much resources that you are going to use for each of those particular activities that you have inside there. All right, and you also want to identify which particular activities that you have in executing that particular project requires you to have more resources, okay, there, or more time, okay, that you should focus on that particular activities, or which one actually are lesser. So this should actually be inside your project planning as well. Okay, once you have planned, then it's time for you to execute. All right, so in executing and controlling, okay, usually when you execute, you have to start controlling these particular projects. Let's say if your projects do have stages, okay, you must make sure that once they completed every stages, they meet the specification that is required to be, okay, met in that stage as required inside the PID. All right, and once they are okay, then you can allow them to actually move to the next stage. Okay, this is called as gateways. All right, gateways. Okay, one thing that why you need to do this particular control is because, all right, you want to avoid this particular slippage and you want to avoid scope creep. But if there's any chances that it may happen, you need to come up with a procedure if your client, okay, decided to change certain criteria of the output that they want. Okay, make sure this is being spelled out clearly, so that when you have delivered your output, okay, if they complain, at least you have evidence that, okay, they are the one who requested for the change in the specification. So that's why, okay, you need to have this particular change procedure, and definitely you need to know, okay, how to respond to the project risk. In each and every steps of your activities, there's always risk involved, right? Okay, so you need to be able to actually respond to those particular risks. And how to respond, you have already spelled it out inside your PID, okay, in terms of responding to risk as well. So PID is like a internal communication between you, okay, between those involved in that particular project. All right. And then finally you reach to the project completion. So basically there are three things that you may need to actually have. One is the completion report, okay, which relates together with this, include the client sign off. That means the project is actually completed, okay. And once it's completed, okay, client sign off has already been performed, then perhaps you may want to do some post-project review, all right? And then what's the purpose of this particular post-project review is actually looking into the whole project, okay? Looking into what went wrong, what are the lessons learned from that particular project, so that if ever you have a new project that are related to what you are doing now, you'll be able to know how to do it better next time, all right? And then another one here you will have will be the post-implementation review, all right? This particular post-implementation review, okay, basically we'll be looking at here is this completed working solution. That means, okay, is the output. Okay, if let's say your output is actually the house, to build a house, so you're just focusing on the review on the house. What is it that went wrong, okay, when you were doing that particular house? Okay, which one that next time that you shouldn't be using anymore, you know? So you are basically doing some sort of like a post-mortem for that particular output of yours. Okay, this post project is some sort of like a post-mortem for the whole process of the project. All right, so that is basically, okay, what this particular project management is all about. Okay, any questions? So we are done tonight with our syllabus area. Business process engineering is actually when you want to redesign something, all right, you start from the scratch. That means, okay, this is what actually business process re-engineering is all about. Okay, you are not going to actually improve on whatever process. That means you are going to rethink. Okay, that means you start to actually use the blank paper. Okay, start empty, start from zero, basically. Okay, rethink of the whole new process. That's what business process re-engineering is all about. Okay. Okay, once you're done with that, okay, some of you were asking that if you were to answer examination question, okay, that requires you to prepare slides, yes, you may need to draw a box, or if not, you can just write up there slide number 1, what are your points, and then your briefing, your supporting notes, what are they down there? Okay, make sure the point number 1 that you have in the slides is actually point number 1 as well in your supporting notes. The bullet is actually in the slides. Okay, the explanation is actually in your supporting notes. All right. So if you don't have any questions, I think we end our webinar tonight. Okay, for those who are already in the WhatsApp group, I will actually forward you this particular slide. So while waiting it to end, do you have any more questions? Okay, thank you everyone for listening, and definitely good night to everyone. Okay, so hope to see you all again tomorrow night.